What if I told you that your tax bracket alone can have an effect on your credit repair journey? Well, the new tax brackets just dropped, and depending on where you fall, can determine the speed to which you restore your credit. So it's important to understand taxes because taxes have the ability to create more cash flow for you when you use them correctly. A lot of people miss the fact that taxes can create cash flow. They look at it like taxes is digging into their pockets. But if you understand taxes, then you can offset your tax liability in multiple ways, which puts more money in your pocket. More money in your pocket equals your ability to pay things off faster, pay credit cards down sooner, and maintain proper utilization in a way that allows you to boost your credit score expeditiously. Not to mention, when you file your taxes, depending on your tax bracket, you may qualify for certain credits or certain refunds that position you to get lump sums that allow you to pay your credit cards down faster. So let's talk about the brackets and then how you can benefit from it. And then, of course, if you need assistance with taking your credit to the next level, you know what to do. So do what you know. IRS announces new federal income tax bracket for 2026. So here are the key points that I'll briefly go over. The IRS has unveiled higher federal tax brackets for 2026 to adjust for inflation. So the tax brackets, basically have adjusted to fit inflation, which everybody is experiencing. The standard deduction will increase to $32,200 for married couples filing together and $16,100 for single taxpayers. Now, if you know anything about the standard deduction, it's one thing to be allowed a certain amount for taxes, meaning that you keep more of your money up to a certain dollar amount. But it's another thing when you understand that if you have a business, the standard deduction also plays a part on how much you can rightfully pay your child tax free, meaning that money that you pay towards your child who helps out in your side business can allow you to get that amount in a tax deduction. So say, for example, if the standard deduction is 16,000 and you're allowed to pay your child up to 16,000 in the form of a tax deduction, now you position yourself to get a huge tax deduction on top of whatever the standard deduction is. Very important to know. There are also changes to the long-term capital gains bracket, estate tax exemption, child tax credit eligibility, which is what I, also want you to make note of, because child tax credit positions you to get amounts in a form of what looks like a refund, but it actually was the child tax credit that allowed that particular thing to take place. The child tax credit for many people is what allows them to get a larger refund just by understanding that. Now, the IRS announcement came a day after the agency said it would furlough nearly half of its workforce due to ongoing government shutdown. So you got to understand all of these things play a part. Could slow down things, could speed up things, and you just want to be in the know of what's going on so you could position yourself to have a tax plan. Having a tax plan means that, okay, I'm not going to wait until the end of the year. Let me see what I'm likely to make, what type of tax deductions I'm likely to qualify for, and how to offset my tax liability in a way that I give away less money and keep more money so I can either position myself for a higher refund, or if you're accustomed to owing, position yourself to not owe. And if you are accustomed to get a refund, have a strategy, a game plan that can help you use that refund in order to get your credit in a good place to now you can use that credit and leverage it for other things. So let that refund turn into a snowball effect for the positive that can benefit you and move you in the right direction. So this announcement took place Thursday. Basically, the raised income thresholds for each bracket, which apply to tax year 2026 for returns filed in 2027. The IRS also boosted figures for other provisions, including long-term capital gains, like I mentioned, estate gift tax exemption, eligibility for earned income tax credit, among others. So for 2026, the top rate of 37% applies to individuals with taxable income above $640,000. So what does that mean? That means if a person is making above $640,000, then they fall into the top tax rate of 37%. So depending on where you are, you may be much lower than that. For many people, they're around the 23 percentile, just depending on their income. But for married couples filing jointly, earning $768,000 plus or more, then they also fall into that 37 percentile as well. So federal income tax brackets show how much you owe on each part of your taxable income, which you calculate by subtracting the greater of the standard or itemized deductions from your adjusted gross income. The standard deduction will also increase in 2026, rising to $32,200 for married couples filing jointly and up to $31,500 in 2025. Starting in 2026, single filers can claim $16,100, a bump up from $15,750. So it adjusts this not that much in terms of inflation, if you really want to be honest, because many people have paid much more than that just due to things being inflated. But it's a step in a direction, but it's all about you knowing what you need to do in order to position yourself for getting the max amount that you can in the form of tax deductions, which can increase your tax refund, which as the higher refund comes in, you apply that or allow that to go to a right direction that can help you increase your credit score. So understand what options you have, and there'll be more videos that I touch on how taxes connect to credit. But I really want you to get full control of your tax liability and understand that if you work a job, that's one thing, but if you have a side business, then that could position you to get additional tax deductions. I help people launch their own credit business and position them to have $1,000 days, and that can change your tax liability or your tax bracket, but it can also position you to get tax deductions. If you want more information on that, you know what to do. So do what you know. Link below. Salute.